Somebody who wants the link?
My friend.
Yeah, give them the link. Let's give a shout out. This goes out to Bucky out in Niceville.
Hey, Katie, if someone by the name of Andy comments on the video, you can ban them from.
I'm gonna be like, Zade says hi.
Zade said, "Hey, Andrew."
Okay,
Okay.
you guys are live.
All right. So, all right. Be smart about what we're doing. Let's go back to here. And here we are in Zoom. Got it. All right. So here we are. We're going to look like this, Zade. And, oh, we didn't, the thing looks fine, right? We got our 4.
Did you see criteria down, but just 5? Now you can't see 5 anymore.
Well, when we go to it, I'll go like this. All right. It'll be there more or less. I'll move around and we'll do some stuff. Okay. So let's talk about what's going, tell me if somebody ever comes on there, right?
I think it's just me.
What's going on in the market? Are you okay to talk about this? You feeling comfortable about what you know? Okay. And then what happens is when you go to share screen, and when we do that, we'll toggle through to your thing.
Okey-dokey.
All right. Say what's going on real estate wise right now? Do you know?
I have no idea.
Okay. Mortgage rates are up. Okay, mortgage rates are up. Prices still good, still high. And transactions down. So what I want you to do, we're gonna say, so what's going on with real estate this week? And then you're gonna ask, what's going on with mortgage rates? And I'll talk about it.
Oh.
And then say, hey, what's going on with prices? I'll talk about it. What's going on with transactions? I'll talk about it. All right. And they'll say, okay, say, we're talking about investing. You're the investor. You feeling it, Katie? We're all right?
It's 9:28.
Feeling good about it. For once, we're almost ready. We got time.
And it's Friday the 13th.
Ooh,
I mean, that's good luck for us.
that is good luck.
Spooky.
Finally get a little luck rolling our way. Okay, I like it. All got a lot. And okay. Go time. Oh, hey, what's the name of our thing, our group?
The investor launchpad thing.
Investor Launchpad. That is good.
Oh, we didn't say to me- I mean, you wanted to make that email, you didn't respond to me.
Okay. Those lights from the ceiling are kind of a pain in the butt, but they don't bother us that bad, do they?
Yeah, they kind of reflect off the board, but I'm afraid if I turn it off, it's gonna be.
Try it. Let's see what it looks
You
like.
can turn that thing on and then
Yeah, let's see. Turn that off. Oh, it's 9:30. We're gonna start. So turn that one on, Katie. Good enough. I think that works. That works. All right, so here we are. Another episode of, you ready for it? Are you ready? Are we ready? Are we ready? What's the new name?
investor launchpad.
Investor Launchpad. Boom. All right. That's very good. Very, very good. Investor Launchpad. Zade, John. All right. Here we go. You ready for this?
Of course.
All right. So what is going on in real estate this week, Zade?
Something with the mortgage rates, correct?
All right. So mortgage rates, which is a big part of what happens in real estate, are up. All right. They're up. Which makes it harder for buyers to access money. Just the way it is, right? There's some talk, maybe the first quarter of next year, we'll see some interest rates come down, but for the most part, interest rates are up.
Okay.
Okay. What else?
Oh, something with the prices, correct?
Prices. Okay, so With rates so high, you would expect, normally we expect rates, high rates to push prices down, but we're not seeing it, not here at the beach. And you're probably seeing that in your research when you look. Ain't nothing cheap out there, right?
Nope.
Don't look like it, right? All right, so prices are still up, mortgage rates are up, cost to own is up, all that stuff.
Yeah.
Okay, what else?
Transactions.
Okay, here's where we're feeling it.
Mhm.
Now, people keep waiting for the market to crash. The market's gonna crash, I'm gonna buy then. I'm not so sure the market's gonna crash price-wise, but I'm absolutely certain that the market has crashed transactions-wise. We're down between 40 and 60% on the number of transactions that are going on right now. It is an all-out crash that way, just not with prices. I'm not sure it's gonna happen that way. All right, so there you go. There's your real estate in a minute here at the beach. Now we can have some fun. Zade, what did we do? What did you do this week?
I looked at houses or condos. Yeah.
Well, really what you did is we said, all right, Zade, let's pretend, or no, Zade, are you going to invest in real estate? What'd you say?
Yeah.
Absolutely, right? And I said, okay, good. How's that going to go? What does that look like? Zade Greenwood out in the world investing in real estate. What does that look like? And what did you say?
Well, there's a few things. I said that like I wanted to have a property.
Okay, wait, let's go back. You said, yeah, well, I got an idea, right? And I think, because you were sitting right over there, you said, yeah, I kind of know. I said, okay, good. What are you going to do? You said, yeah, right? You remember this the same way I do? And then we looked at it, right?
Yeah.
And let's look at it here. What did we talk about? We talked about criteria, right?
Yeah.
All right, let's go through it. This is gonna be fun. All right, so what was your criteria?
So at first I was looking at houses
Okay,
and kind of realized it's a little bit expensive and they're hard to find.
houses are expensive in Destin, Florida, aren't they?
Mhm.
Absolutely, they are. So you started at a house, and this is kind of a cool story for anybody watching. He's like, I think I found one, and you're showing them they're expensive.
Yeah.
I'm like, okay, cool. You're like, oh, I'll get roommates. They'll be right. You're charging your roommates about $10,000 a month to be in these expensive houses, right? And then by the end, you're saying, well, I get a pull-out couch. I can sleep on the couch. I can do all this stuff. So great, so great. But we're learning what it's like to be an investor, right?
Right.
Because the numbers it's in the math. Investing's in the math. Okay, so you start out at an expensive house, right? And then where did we go to? Where'd you end up yesterday?
So I mean, yesterday I just kept looking and looking. I was like, I cannot find anything. So I started looking at condos. There's a little bit more options there.
So we started looking at condos. Why condos? Why did you fall into condos?
Well, I mean, they're a little bit cheaper and they're
Okay,
easier to
money,
find here. Yeah.
Right? They're less expensive and there's more of them, more selection, right? So you got it. All right. That's your first criteria. When you're an investor and you're looking, you need criteria. You got to know what you're looking for, or else it gets really hard to find. So you start out with, in this case, a house, a condo. Do I want a house or a condo? All right. And then we started at houses and we ended up at condos, and now you're feeling reasonably strong about condos.
Yeah, a lot better.
Okay, good. And then the next question is where? Where are you going to own this real estate?
I mean, I really would like to be in Destin.
Okay, you chose Destin as opposed to Los Angeles or New York or Crestview?
Correct.
Okay, right. Why Destin?
It's just close to family and there's the beach
All
and
right,
work and stuff.
close to family, right? So mom can still do your laundry. We like that. And it's close to the beach. Are you a beach guy? Are you like a surfer guy, or what's your deal?
I like a little bit of
A
everything.
little everything. Okay, sand in your toes. I get that. All right. So you want to be in Destin, close to family, the beach, and everything. Your lifestyle. Okay,
Right.
that's a big part of your criteria. Next part of your criteria is how big. What do we got? Square foot, bedrooms, all that kind of stuff. Is that what'd you end up with?
For a start, if I was gonna do a condo for a starter condo, I want it to be at least 3 bedrooms and around
Okay.
1,300 square feet.
3 bedrooms and 1,300 square feet. Okay. 3 bedrooms. Why 3 bedrooms?
So when I looked at the math, it's a little bit better for the cost, at least, to have 2 roommates. Just-
Okay. So you're gonna have roommates, you're gonna have this condo, and there's gonna be y'all living in this 3 bedrooms, right? Cool, that's a house hack.
Right.
That's what they call house hacking. So you can buy this place and have a couple of your buddies living in there, and your buddies are gonna pay the mortgage and the cost to own it. And if you have 2 of them, 1 bedroom each, I'm assuming.
Yeah.
And then, so the 2 of them will end up paying the mortgage and the cost to own, creating a situation where you're living rent free.
Correct.
Boom. Okay. So we got to figure it out that you're going to get into a condo. House or condo is your first criteria, where you determined it was destined. Your third thing was you want at least 3 bedrooms. All right. So you can have roommates. Fourth criteria is money. What'd you come up with on money? How much are you going to spend on this place?
I wanted to do at least from like 250 to 350,000.
Why?
If I were to have roommates, it'd be a lot more easier to have.
Because it's all in the math.
Yeah.
Right? From an investment standpoint, you got to know the math works. So at 250 to 350, you can have 2 roommates, we think. And they will cover the cost. Okay. What's your next criteria? What was the last thing you came up with?
The ROI.
Return on investment. It's got to make the number, back to the math, right? So what is your minimum ROI requirement?
At least 10%.
Oh, 10%. Nice. Okay. He's a big hitter. We like that. 10% is a pretty good number. If you can't see the writing, there it is. Writing's on the wall. 10%. Okay, that's a good number. Now, I would say to this, since you're going to be living in it with your friends, if you can get 10%, boom, powerful. You may want to consider also, if you can get your roommates to pay the cost to own, so you're living free, that's good. Because when you eventually move out, or they all move out and you're just renters in there, you can either short-term rent it, or you can put 3 people in there, and the person who replaces you will create your cash extra money. Does that make sense?
Yeah.
So I would argue the minimum you want is it for it to cash flow, meaning the money you have coming in is equal to or greater than the money you have going out. All right. Now, if the spread is 10%, winner, chicken dinner. If it's less than that, it may be okay. But that's your criteria. That's part of your criteria. Maybe the spread is your criteria. I got to get some amount of money back.
Right.
Make sense?
Yeah.
Okay, cool. So with this in mind, what'd you do next?
So I went on Zillow and I just started looking at, condos around the area.
Nice. And you found some.
Yeah, I found a few.
All right, let's pull them up. Okay. I'm going to share the screen here. Here we go. Where are we at? Good. So I'm going to try this. Please hold. And we're going to go number 1 here. Is this number 1?
Yep.
All right. So tell us about this one, Zade.
All right. So when I was looking at this,
It looks pretty cool.
yeah. So this one is a smaller
Okay.
condo. It's 2 bedrooms, not 3.
Okay.
But when I was looking at it, I found a couple of things. So if we go down here and look at some of the pictures,
Okay. I can see you living here.
pictures of the bedrooms. So the master bedroom looks like you're just gonna have like a normal king size bed in there for the master.
Okay.
But then if you go down to the guest bedrooms, where are they at? Okay, right here. I was looking at it. I had a feeling that you could probably fit 2 beds in here.
All right. So you can squeeze a couple in there.
Yeah.
Maybe some bunk beds.
Right.
Okay, cool. Right. Yeah. You have very small roommates. Okay. I like it. All right. I like where you're going. Remember though, we got to look at the math from an investor standpoint, because you're not going to live here your whole life.
Correct.
So does the math work? Do you think you're going to have more coming in than is going out on this?
I think so, and because I went through the Zillow calculator thing.
Okay.
It pulled up decent numbers.
Like what's decent? What are we doing here?
So let me pull up the calculator thing real quick.
So you got a rental property calculator you're working off of that goes in and looks at your purchase price, your down payment, and the length of the mortgage, interest rate, and all that stuff, and it
Yeah.
calculates.
Correct.
So we'll put that in the show notes where you can get all this stuff. So the purchase information tells us what? What's the purchase price?
Oh, the purchase price is $299.
$299. We're gonna pay full price for it. Okay, let's see if it works at that. How much down are you gonna put?
I'll keep it.
Right now it says 20%. Okay. You gotta change that. You can probably go 5 at the very least.
Probably do like 8,
All right, let's say 8.
just a good average.
Okay. So at 8%, our down payment, how much does that come out to be? Does it tell you there?
The down payment.
Well, 8 times 3 is 2,400,
24.
24,000 bucks.
24,000.
Okay. And that creates a mortgage amount of 275,000 you can get a loan on, and $1,318 a month. Well, your interest rate's at 4%. Change that interest rate to, I would change it to probably
8.
9. Okay, so here's what we got. Purchase price $299. You're gonna put 8% down, roughly 3 times 8 is 24,000 bucks. Mortgage period 30 years at 9%. 2,213 a month is the mortgage. Now you got utilities and HOA and stuff, right? Okay, go down. What's the next thing? Monthly rent. How much are you gonna get on this thing? How much are you gonna charge your boys?
If so, saying that it is they would be sharing, most likely
Okay.
sharing a room. Probably a grand, maybe 800.
Can you get 800 out of them?
Probably,
Okay.
just with all the.
Punch in
stuff.
800. You got 2 of them giving you 800, so that's 1,600 you're gonna get.
Correct.
Okay, so type in 1,600 is your monthly rent. Okay, let's look at the expenses. How much in taxes? Does it show on here? Do the thing here down. Use your, or however you do it. There you go. Go down the side here, all right. Monthly HOA, that'll ask on there, what's the monthly HOA? Go back up. They'll be on your expenses. Okay, keep up. Oh, more. Down. Okay, so where's your monthly? All right, well, vacancy rate, repairs, maintenance, property maintenance management fee, I would go 8%, or what is it, 515 a month? Are they asking for the year on that? The percentage go down. All right, so we're gonna have to work this in. All right, so we're working on this.
Yeah.
We got to work on this. So people, when you're doing your deal here as a first-time investor, do not forget HOA costs, insurance costs. You're going to want insurance. Don't forget, there's going to be repairs and maintenance costs, things like that. On a condo, it's going to be a little bit different. On a house, you might have other things that come in there, landscaping, things like that. So you got to build all those costs in. On this one, Zade, it doesn't look to me like the numbers are going to work. Your mortgage rate, your mortgage is going to be at least 2,200. You add everything else, you're going to be over 3,000 bucks a month, and you're only getting 1,600. You're upside down on this thing. I would say no on an investment standpoint for this. You got another one?
Yes, I do.
Sorry to crush your dreams, but that one's out. Okay, what's number 2 here?
All right, so this one is
3 beds. We like that.
Yes. So yeah, this one is 3-bedroom.
Okay.
A little bit better. A little bit more.
So here's what I'm going to tell you. When you start looking at investments, the inside stuff matters very little. All right. I know you're going to live in it, but you got to take yourself out of, I'm going to be the living guy here, and put yourself just straight in the mat. Is the cost I'm going to have to pay for this? Like, let's just say we use a list price here, 310,000. I'm going to have to come up with, let's say, 5% of that, which is roughly $15,000. Okay, that's my cash out.
Right.
Okay, to buy this thing. So let's put down here, you're gonna put 5% on your money. Down payment is 5%. The mortgage period, 30 years, interest rate of 9. So we got to cover 2370. Okay. Plus HOA, plus insurance, plus all that stuff. So again, we're gonna be right around $3,000. Okay.
Right.
But now you got 3 bedrooms. So you got 2 roommates.
Mhm.
Can you get 1,500 a month in rent on these folks?
I think you can, and so I think this one also has access to a lot of things around the area. Like I think it has access to pool, and other
Okay.
things like that. So it might be better just for the people living there.
Okay.
So I could probably charge more.
Okay. Maybe, because now the next thing you got to think about is when you move out, will somebody else move in and give you 3,000 plus your 10%
Right.
that you want, right? So 3,300. And what you're going to want to do at that point, Zade, is you're going to want to look and see what else can somebody get for 3,300 in rent.
Right.
And if they can get a bunch of other things that are better than yours, this one won't work.
Right.
Does that make sense?
Yeah.
Okay. Did you do that exercise?
Did not.
Probably not yet, right? So that's the next phase.
Right.
The stuff's a little more complicated, not hugely complicated, because it's
Right.
just simple math. Is the amount coming in greater than the amount going out?
Yes.
But you got to be careful. Okay, you got another one?
I do. Pull up the next one.
All right, 327. All right,
So this one is a little bit more expensive.
327. It looks nice. Remember, don't get caught up in the looks. Get caught up in the math.
327, 5, 9. Okay. So one thing about this one that I did like for the just rent, if I were to rent it purposes, is it's in an area accessible to a lot of stores in walking distance, and there's a very
We
nice
like all
pool,
that.
gym. So it's good just for renter purposes. Just
Okay, because renters gonna like that, right?
correct.
They get close to stuff.
And it is 3-bedroom, and I think
This
You
one's,
could probably-
they're all kind of in the same ballpark,
Yeah.
3,000, 3,200 a month.
right.
Okay. So that's cool, I guess. So again, I think the next step, you got some places here. This is good. You started to look.
Right.
Tell me some reactions. What is it? Is this easier or harder? Did it cost more? Did it cost less? Or what's your reaction on this?
It's going to be a lot harder, especially once you start going into the deeper things of it.
To find a
This
spot?
is just surface level, and it's
Yeah.
still a little bit more difficult than most people would think.
Are you still into the condo over a house?
At first starting out, yes.
Okay, because now here's the other thing you want to keep in mind, especially in a vacation world like we operate in.
Right.
If you and your buddies aren't living in it, that doesn't mean you can't short-term rent it. And short-term rentals are usually a lot more
Right.
in terms of price. Make sense?
Yeah.
Let's go ahead and bounce back to our Zoom here.
Almost.
Yep. Or can you make this big?
But yeah, so
Oh, yeah. Grab that. Oh, all right. We're learning,
Yeah.
people. Stop share. There you go. No. New share. No, stop share.
there it is. There it is.
You guys see the behind the scenes in front of the scenes. So back to our story. I love that you're doing this. I love that you're learning. And the cool thing about learning is you got to start and be not so great at it. And you get better and better and better as you learn more and more and more.
Got to fail to succeed.
You got to fail to succeed, and you're starting early. So cool, right? Because we're going to learn this. We're going to find you a spot that you're going to be able to cash flow. And the cool thing is, if you buy this thing for 300K plus minus today, in 20 years. Oh, and by the way, happy birthday yesterday, right? So you're now 16. So in 20 years, you're gonna be 36, or in 30 years, you're gonna be 46.
Yeah.
And this $300,000 property will probably be worth somewhere around 800, maybe even $1 million.
Yeah.
There's worse things in the world than that, right? And somebody else will have paid for it. And this property will have funded your kids, Zay Jr. and whoever else, college, right, at Harvard. And it funded your second house and your third house and your fourth house. And now you're in retirement because you're only 45 years old and you're already retired because you like to go to all Zay Jr.'s practices. He's on the football team, all that stuff. And it all comes because you started figuring out investing early. Okay, that's super cool, super cool. So what we're going to keep doing is we're going to keep learning the pitfalls and the places that throw you off, and you wake up underwater and you're having to sell because it's costing you more than you thought it was going to. All those problems. So that's cool. That's cool. Any other takeaways from what you're doing?
Yeah, find the right property if you're gonna invest in it. 'Cause
Find the
you don't-
right property.
You don't want to lose money on it or anything like
So
that.
smart. And remember, we all like the shiny new whatever.
Yeah.
You usually got to pay for that.
Right.
You're most likely going to be better off finding a not so great property that you can paint or fix up or
Yeah.
do some minor things and value add that will pay off. And then you get that rent and whatever. It's always about the math, dude. Never forget that. It's always about the math.
Very true.
So once you keep that worked in and the math works, bye. Get your criteria. As soon as you get to a criteria that works for you, it makes it real easy. Just find something that are all, you can check every one of these boxes. And if it meets all this, buy. Okay. And we're going to look at financing because that'll change some things. We're going to look at all kinds of negotiation tactics, all that stuff, because all that changes. All right, dude. So investor launchpad, getting ready to go, dude. Getting ready to go. All right, let's get back to some important things. Who y'all play tonight?
Chipley High School.
Chipley High School. They any
Yeah.
good?
They're pretty good.
Okay, so but we're going to win.
Yeah.
Good. I like the confidence. All right. Anything else? What? Give us something going out. Give us a piece of info we need and help.
Just to leaving, I don't know, quote or whatever you would call
Do
it.
you have one? All right, let's hear it.
If you're gonna be investing, you're starting off young, listen to this guy.
Oh, there we go. Oh God, here's your $20. Thank you. There you go. Follow the advice of a guy on the launch pad. All right, guys, we'll see you next week. Cool.